Okay, good morning, class. My name is Mugidzi. I'm leading Group 2, which comprises of Mr. Tato Bating, Ms. Kisoro Oteng, and Mr. Onthatile Samuel Bakokunya. So our group will take you through the Sefalana Holding Company Limited and audited group financial results analysis for the year ending April 2024. Sefalana is Botswana's largest retail and frequently movable and consumable goods company. Founded in 1974, listed on the Botswana Stock Exchange by the market cap of 2.9 billion as of April 2024. It enjoys more than 3 times larger than its former sector rival, which is Chopis Botswana, which is standing at 948.7 million. It operates more than 125 stores in Botswana, mainly hypermarkets, supermarkets, cash and carries, liquor and convenience stores. It has expanded to more than 135 stores by October 2024, having footprints in Namibia, Lesotho, Zambia, and operations in Australia, with more than 7,900 employees. Sefalana is headquartered in Gaborone, Botswana. Its business segments include retail, which is 93.6% of its revenue. There is also manufacturing at 3.9%, industrial distribution at 1.5%, as well as retail estate, which is at real estate, which is at 1%. Under retail, which is the major contributor of its revenue, there is cash and carries, there is shopper, then there is hyper stores. Under manufacturing, Sefalana produces dry grains, toiletries, as well as detergent. Industrial distribution, agricultural and construction materials, as well as automotive products. So, on real estate, it manages various commercial stores in Botswana and Zambia. The purpose of this study is to determine if the result will make good investment decision making in terms of assessing the profitability and growth potential. Here, the investors analyze revenue trends, profit margins, return on equity to determine if Sefalana is a viable long-term investment. There is also stock valuation. Financial ratios helps to determine if the stock is overvalued or undervalued on the Botswana Stock Exchange. The other purpose is to ensure that the strategic business performance evaluation in terms of operational efficiency. Here we analyze gross margins and inventory turnover to reveal how well Sefalana manages its cost and supply chains. There is also possibility of determining market share expansion. Comparing revenue from Botswana with its other stores in places like Namibia shows if diversification is worth making. Then there is also a point of competitive benchmarking. Comparing Sefalana's financials with that of its competitors to assess the market positioning. Then we go to credit worthiness and loan approval. Here, lenders, which include banks and creditors, they examine debt to equity to ensure if Sefalana isn't over-leveraged. Then the other aspect is of management and corporate governance. Here we are talking about internal audits to determine inefficiencies. For example, stores with high operating costs. Then there is an issue of regulatory and tax compliance. Sefalana is listed under the Botswana Stock Exchanges. Here we monitor disclosure for shareholders' transparency, as well as Botswana Unified Revenue Services, where we review financials for proper tax filing. The executive summary of the financials: Sefalana Holding Company as a leading retail and wholesale group in Botswana has demonstrated a robust financial performance in the year 2024. The company reported a revenue of 9.7 billion pula, an increase of 7% from the previous year. Profit before tax stood at 443 million, reflecting a 10% year-to-year growth. Earnings per share increased to 1.33 from 1.20 in the year 2023. The company's net asset rose by 8.7% to 2.5 billion. Sefalana's market capitalization reached 2.7 billion pula. A summary of statements. Highlights for the income statement: a revenue of 9.7 billion pula, as I previously alluded. Gross profit of 1.8 billion. Then there is earnings before interest, tax and amortization of 443 million pula. Balance sheet highlights indicates that there is the total asset of 4.6 billion, total liabilities of 2.6 billion pula. Then the cash flow indicates that there is an operation cost of 500 million, investing cash flow of 200 million pula. So to further allude to this, I will take you through the ratio analysis.
Good morning. Speaking to the key financial ratios in the performances, we have profitability ratio. The gross profit margin was at 18.6%. The net profit margin at 3.6%. Return on equity was recorded at 13.5%. Return on assets, 7.5%. On liquidity ratios, to check if Sefalana Holdings is really liquidating, the current ratio was at 1.8, the quick ratio at 1.2. Then on leverage ratios, the debt to equity ratio was 13.5. The interest coverage ratio was at 68.5. And speaking to the efficiency ratio, inventory turnover was at 5.2 times. Then the receivable turnover was recorded at 8.1 times. You will note that receivable turnover is measured in days. Then the asset turnover was at 2.1 times. To the next slide, we did a comparison to the key ratios to check the financial ratios if there was any change in growth or declines. The first ratio had an increase in profitability of 11%. The next ratio was at 10.5, comparing to the 9.37 from the previous year, and it was a slight expansion. The slight expansion will depend on who's analyzing, but from our point of view, we saw it as a slight expansion in valuation. The return on equity had an enhanced efficiency, and the net profit margin, a narrow improvement of profitability per sales. You remember that some markets are having the rands and the dollars with the expansion to Namibia and South Africa. Then debt to equity, the totals, we recorded a significant reduction in leverage and more equity financed, meaning there is less debt to dependent and remains conservative with a prudent leverage. Current ratio remains healthy when we are doing a short-term liquidity comparison. Then it's a stable liquidity with short-term obligations. Dividend yield, there is a higher yield showing continued commitment to shareholder returns. One point to note on this last analysis is that Sefalana is maximizing the shareholder engagements, and they are doing a wide range of products and services. Thank you. I'll hand over to my next team member. Thank you.
Thank you very much, Kisiwa. My name is Tato. I'll be taking you through the competitive analysis together with the financial performance and strategic recommendations that we have come through with for Sefalana Group. As my colleagues has already alluded, Mr. Okedit and Kisiwa, the Sefalana Group has outperformed its key peer retailers in the market showing 3 times earning and margin resilience. And if you look at the industry performance, you also conclude that the company has been doing very well compared to its key competitors. This could be because of many reasons: performance on revenue growth and the footprint expansion that Kisero has been talking about. And further to the financial performance analysis, I'll be talking to this graph or to further analyze the financial performance. And the green color there represents the year 2024 and the orange one represents the year 2023. This figure shows that despite the macroeconomic obstacles such as inflation, import restrictions, and regional supply chain problems, the company's sales grew by 6.63% from the 672 million to 693.1 million. This indicates strict margin control in the face of growing expenses by Sefalana Group. More significantly, the earnings before tax, the earnings before interest, tax, and amortization, which is the EBITDA, it also increased by 11.61% to 459.5 million, demonstrating gains in cost control and operational efficiency. The company's net profit also increased by 11.65% to 335.5 million, while its profit before tax increased by 10.01%. This presents the strong value creation for shareholders, as indicated by the earnings per share for the group, which increased also from 1.20 to 1.33, which shows a rise of 10.83%. And this also reflects the good net profit growth. The net asset for Sefalana also grew by 8.7% from the 2.3 billion to 2.5 billion, which demonstrates the company's dedication to fortifying its balance sheet. Additionally, this data indicates that the share price also increased by 21.03%, which might be ascribed to investor confidence and steady dividend policy by the company. And also, speaking of these dividends, the company's shareholder-friendly policy of allocating roughly 50% of earnings as dividends was maintained when the total dividend paid per share rose from the 62 to 65 table, reflecting a 4.84% increase. The business' strong position for long-term prosperity because of its effective margin management, wise investment, and steady shareholder return, as presented by Kisero and as shown by this increase in profitability. However, although this investor confidence, or there appears to be investor confidence, because of the well-positioned as seen by the double-digit growth in profitability metrics, we have developed strategic recommendations for the company to remain profitable or relevant in the market. And we have suggested or saying, in order for the company to continue being profitable, it needs to consider prioritizing supply chain optimization, regional expansion, and digital transformation. And in order to continue to make profit, there is a need for operational efficiency in order to reduce costs and improve service levels. There's also a need to further increase the footprints by market expansion and product diversification and digitalization. My colleague Reba Kokunyani will continue further on the strategic recommendations. Thank you very much.
Good morning, colleagues. My name is Umtatile Samuel Bakokonyane. I'll be continuing on the strategic recommendations to the Sefalana. Remember, like my colleague has just said, all these recommendations the intention is to help the company to maintain its profits. And then these strategic recommendations are informed by the quantitative data and the analysis that was done by Kisero with the ratios. So one of the recommendations is that the Sefalana should continue benchmarking. It should compare ratios such as return on capital employed, gross net margins, revenue density per store, and shareholder yield against competitors such as Choppies, ShopRite, Pick n Pay, and other retail stores. And then one other recommendation is that monitor margin trends, inflation pressures, and supply chain risk remain key risks. Maintain sorry about that. So the inflationary pressure and supply chain risk remain key risks. In this case, the constant monitoring margins is critical to protect profit. One other recommendation is that asset dividends sustainability. A constant 50% any payout is attractive, but should be evaluated against reinvestment needs. We have realized that dividends sustainability is also key. The company currently pays out around 50% of its earnings, which is attractive to investors, but must be balanced with reinvestment needs. The last recommendation is that evaluate geographic diversification, evaluate operation outside Botswana, find out that preference shares. This will meaningfully contribute to revenue and profits. Before we go there, finally, we can say expanding beyond operations beyond Botswana should be based on performance and return, especially important as we evaluate assets turnover across the regions. We can move on to the next slide, which talks about the challenges and mitigations incurred in the financial year. Margin pressures is the first challenge that they have encountered. The company faced margin pressures due to increased competition and inflationary trends. To counteract this, Sefalana focused on cost management and strategic procurement. Supply chain distributions, supply chain disruptions, supply chain challenges. They experienced supply chain challenges, particularly from South Africa. Suppliers were addressed through accelerated procurement and inventory management. Another challenge was the common or well-known importation restrictions. The Botswana government imposed restrictions on certain products. So this was also a challenge that they have encountered. We can move on to the next slide, which is for the conclusion. The conclusion, Sefalana Holding Company Limited has demonstrated resilience and strategic foresight in navigating economic challenges. So they have shown growth. Sefalana Group posted a robust 2024 financial year, solid top-line growth, expanding operations, disciplined profitability management, steady dividends, and sufficient competitive positioning. So the last point is that by focusing on digital transformation, operation efficiency, market expansion, product diversification, and sustainability, the company can further enhance its financial performance and shareholder value. So this concludes my presentation and the presentation for our group. For now, I will invite comments or questions. Yeah, in the absence of questions and comments, let me thank you for your audience.
Thank you.